A lender steered you toward a conventional loan. It happens. I've seen it a million times in this business. You trusted them to do that and what's in your best interest, but here's what they didn't tell you. The conventional loan was just easier for them to process. It had nothing to do with what's financially beneficial for you. Let me repeat that. It had nothing to do with financially being better for you. It was just easier for them. This is the type of shit that you have to put up with. It's easier for them to process, not better for you to pay. So I'm going to go over some things today. We're going to look at some comparisons. We're going to see how that can change the way you see future loan conversations when you're going to use this benefit going down the road. Now, what I'm going to say is that not every time, okay, we're not saying 100% of the time the VA loan's better. There are certain circumstances to where the conventional loan would be more beneficial. We'll go over that as well. But here's the part that they don't tell you. They're doing this because they're lazy. They're not explaining this to you and letting you decide and giving you their expert opinion because they're not experts. There's some jackass with a mortgage license that just got licensed 10 minutes ago who's now a VA loan specialist. That's the problem. And so we're going to unpack some of those things today when we're talking about 5% down, 10% down. Do we include the funding fee? Are you funding fee exempt, right? Rate differences, opportunity cost of the down payment. And I venture to guess that most loan officers can't even explain what opportunity cost is. Okay. We're going to talk about FHA versus VA because that's where people get tripped up. They think that FHA is easier and better, or at least that's what they tell you. Okay. So most agents and most lenders get this wrong. And FHA is very specific. Their handbook looks like the damn phone book. FHA's handbook, the 26-7, is very thin because it gives lenders the opportunity to, who understand this and are practitioners of this benefit, to be able to explain things to you and go through your scenario, because if they tried to go through every possible scenario that you might go through post-service or in-service, that thing would be 10 times the size of a phone book. So the story matters. But let's talk about numbers, right? Let's get the comparisons just in numbers, not in guidelines just yet, but just in numbers of FHA versus VA, right? So obviously the VA has the funding fee. We've talked about that in previous videos. FHA has what they call upfront mortgage insurance premium, which is 1.75% financed into your loan, much like the VA funding fee. Okay, so it has that same principle. But it also has monthly mortgage insurance. And you cannot get out of it, no matter how much money you put down. Period. It is there unless you do a 15-year loan and put so much money down, then it can go away. But if you do a 30-year fixed loan, that MIP never goes away. Ever. So imagine paying, $100 a month for 20 years. It's a lot of damn money, right? But they don't explain it to that way. They're only doing it because they think FHA is easier, which is complete and utter crap. It is not. It's not easier. It's actually harder. Okay. And we can get into some of that later. Okay. Let's talk about the interest rate reality. So the interest rate reality between VA and conventional is that VA interest rates are typically lower. Historically, they're about 0.25% lower. Now, as in previous videos we've discussed, some of that can adjust depending on how low your credit score goes, right? But the great thing about VA is that if you've got a 650 or a 750, typically you're going to get the same rate. No loan level pricing adjustments on VA loans like there are in conventional. Conventional loan at 650, you get killed on loan level pricing adjustments. That loan would be so blastedly expensive and your rate could be 0.5 to 0.75% higher. If we're talking equal to equal, let's talk 720 credit scores or 700 credit scores. VA is always going to be better. Now, some lenders out there aren't very truthful about that. Some lenders out there will tell you that conventional is going to be better in that regards, and it will not. So ask better questions of the person, the professional handling hundreds of thousands of your dollars. It's what's required of you. Okay. In the secondary market, it doesn't matter, right? VA is VA, conventional is conventional. So let's talk about when conventional might actually win. Conventional might actually win if this person is putting 20%. They don't have a disability rating. And so if you're looking at maybe a subsequent use funding fee, okay, on top of that, sometimes if the rate is 0.25% different, VA's lower 0.25%, conventional is higher, you might see a benefit of that. Now, I mean, you're going to put 20% down and then roll 3.3% back into your loan. Might not be the best financial decision, okay? But we're going to show you that side by side, because at the end of the day, it's our job to educate you, show it to you in black and white. It's really that simple. I will show my clients this particular scenario, let them decide what it is they want to do. Now, sometimes there are back room issues that, people are going through with lenders involved. Okay. If they're being incentivized by some of these lenders, United Wholesale Mortgage is one of them. They will incentivize people to do certain things. I don't like that. I think it's steering, but they do it anyway. So be cognizant of those things. And, if you're dealing with someone, a loan officer who doesn't do these things, and God forbid you run across that and you stay with them, which I don't know why you would, but let's say that you do, ask for that comparison. Have them break it down for you. See what they're made of. If they can't do it, well, that's a friggin' problem. Okay? So you have to ask better questions, because it is your benefit, it's your money, and it's your debt, and it deserves that. Okay? Now, the math almost always points to VA. But now, hopefully, by this video, you have some framework to check it yourself and to call out any lender who doesn't show it to you. That's our job. Okay? That's what we're supposed to do. So next week, we're going to talk about using your VA loan more than once. There is this myth that still exists in 2026, the year of our Lord, and all the information that we have, that people still think you can't do that. Either by lenders just steering them in the wrong, because they're not smart, the agent's not privy to the information, you've been told otherwise, or you've heard, or you've read, or somebody you served with did X, or whatever it is. Well, we're going to debunk all of that. I'm going to show you how we can do that. Okay? It's not just a one-time benefit. That is wrong. It is a lifetime benefit. So do us a favor. Subscribe, click on the little bell down below, book a call if you want me to run some specific numbers for you. That link will be below. See you guys next time.